Hello everybody. Now I'm going to talk about silver and what next for silver. As you silver denizens will already know, silver is on another run, and here's a chart that clearly shows what I believe to be a breakout. When a asset reprices, it goes up like that, reprices to an equilibrium and goes like that. Now it can go like that or like that after that, or carry on going sideways. That's kind of obvious. But when you get that repricing moment, particularly if a commodity or a share or an asset has moved a long way, when it goes up or down, when it breaks out of that repricing range, it's going to really travel. This chart suggests to me that we are breaking upwards, and we're all, as long silver people, which I'm sure we are, basically bullish, and we're looking for the next move. So that next move, as far as I'm concerned, is now on. And of course, we should get a similar move in gold, we should get a similar move in platinum, we should get a similar move in palladium, and we might even get a similar move in Bitcoin, because it's not just going to go straight down to 60 or maybe 40,000 in one straight line. It's going to bounce. It always does. When something crashes, it gets the top, goes down, it recovers, everyone goes hallelujah, it's going to the moon now, and then it goes down. That's what happens in a crash. So you could expect that Bitcoin could bounce around here and then head on down. And you can expect, or I'm expecting, silver to take a run to the next level. Well, that next level is on this chart. And if memory serves, if you want to think of it exactly, which you shouldn't, that's about 68,000. Well, 68,000 would be very, very nice indeed. And then what? Well, I'm expecting it around that level, it could be 70,000, it could be 66, to then go into equilibrium. And then that could be the top. It might not be, it might be. It's in an equilibrium. Now, the bulls out there for silver, and I'm one of them, is actually looking for silver to go to $100. And I say the word $100 because in the market, particularly retail market, people think in terms of round numbers. So for example, where everyone's going, it's going to go to 100, I'm going to sell at 100, and the smart people say I'm going to sell at 99, and the really smart people say I'm going to sell at 98, 97. And then you get that, it's going through, oh, it stops, oh, it goes down, oh, it goes up, oh. And the same when things break down. Oh, it's going to bounce when it gets to 100, yeah, it bounces, down it goes again. So round numbers offer a psychological support which never really holds, and everybody will be thinking of $100 silver when silver's 67 or 70 or 75 or 80, and they'll be thinking $100 next. So $100 is a magnet, is a psychologically normal level for silver if we continue in this silver boom, and I believe we will, and I believe we will get towards 100, and that is the price magnet target. So here is a chart that I drew many weeks ago, and that goes straight through 100, but you can see the logic. And when you look at that chart, what you're seeing is a boom bubble chart, and that's what bubble charts look like. They always look like that ever since the world began. And as far as I'm concerned, my first boom bubble bust charts were in commodities, and we're in the 70s when I was like 12, and I used to be drawing lines on charts back then, and they were performing like they're performing now. And interestingly enough, I was researching the tin, it was actually a corner, the Tin Council out in Asia cornered the market in tin. I think it was Malaysians, I can't remember, to be honest, which countries, either Malaysians or Indonesians, can't remember, but they were the big suppliers of tin, and they cornered the market, and they tried to do an OPEC with tin. And you can see the chart went like that, and then it went over and over and over and over, and they couldn't support it anymore, they couldn't support it, crash. So you can actually see the support operation in the chart. And in the same way, you can see the boom bubble in gold and silver, and shortly I expect you'll be seeing the same in platinum and palladium. And commodities have that aspect to them of boom bubble bust. That's a very commodity thing to do. And we are in a boom, and we are probably going to be in a bubble in precious metals. And well, you know, I am not a long-term, all my life I've stacked precious metal stacker. I got interested back in COVID when it was obvious to me that we were going to get inflation, and then obvious to me that precious metals would go mental, and they didn't. But I was watching it ever since, and then suddenly the chart said, hey, this is going to be a boom bubble bust chart. And I pay attention to those charts. I don't care what asset it is. And then I developed my thesis that gold is for war, etc., etc. And it's all panning out. And we are in that boom, I would say potentially bubble territory now. But of course, everyone is scared of a bubble and pretends it isn't one. But actually, a bubble's great. In fact, bubbles are fantastic to make a load of money. You just have to realize that's what you're in, and you have to get out near the top, and you don't want to get out at the bottom. And this is probably the bottom of the bubble phase, or certainly not the top of a boom phase. And it's doing the boom bubble chart. And that's why I drew it like that. Because that's why I drew gold like that. Because if you recognize the formation of a boom bubble bust chart, and you can forget the bust if you like, but a boom bubble chart, you can get in at the bottom of that and ride it all the way up. Now, personally, I think there's very good reasons for gold, silver, platinum, palladium, in fact, all metals to go on this cycle. But at the end of the day, it's how am I predicting where it's going to go in the short to medium term? Because that's really what most people care about. I think about it in a long-term way, and I think that gold at $8,000 an ounce will be toppy. I think silver at $80 an ounce will be toppy. $100 an ounce toppy. And I'm not expecting silver to go to $300 an ounce, but actually when I hear that in the media, I will probably sell. And that is a good signal to get out when you hear the media saying, wow, isn't it amazing? It's amazing. It's going up. Oh, look at the queues around the block. Yeah. It's going to go to $500, says Joe Blogs. And that is normally a time to prick your ears up and go, ooh, this isn't at the top then. And I will get out. I'm not emotionally or spiritually attached to precious metals. And I will take a nice profit and I will move along to whatever I think is going to go up next. But that aside, this is a chart that indicates to me we're on our way. And we're on our way to the mid-top 60s. And we will probably be on our way to $100 and perhaps even more. And why? Well, when you get these repricings, the asset will move and reprice and then get into equilibrium. And if it breaks up, it tends to go as far again. And you might go, really? But just go and look at all sorts of charts that are like that. Go look at NVIDIA, go look at Apple, go look at those superstar companies, and you'll see the same kind of behavior. You'll see a zoom, equilibrium, and it'll either go back down again or it will go as far again. And then it will equilibrium, and then maybe it'll go up again. But again, it will go up in a similar sort of size of the time before, and then maybe do it again. And there'll be these breaks in the middle, quarters, eighths, 16ths, 32s. You'll see them time and time again. You can go look for those in other assets, find them, and then go, ooh, what's Clem saying about silver and gold? Oh, he's saying the same thing. And oh, look, there it is. And that's what I'm looking at. And in a boom bubble market, you get what I call the fish hook. Some people call it a cup with a handle. I never see a cup with a handle. And some people would call it the hockey stick. But basically, it's a power function curve growth. So if it was x squared growth, it would go like that. But this is like a say that again. This is like a parabolic. It's like that. It's like a rocket ship lifting off. And that is what we are in the middle of in gold and silver, and in due course, I believe, copper too. And then it's just a matter of spotting that you're in one and then trying to guess the top so you can get out near it. Now, some people, not many, but a few in the markets I've met over the years, they say, oh, don't worry about it, just let it go up to the top and then go over the top and start going down and then sell. And the logic for that is you can get out way too early, and these things can go way higher than you expect. So just ride it to the top and back over the top again and then sell. Well, I've never done that. I prefer to go, yeah, that's enough, goodbye, and then leave some extra for the other guys. Because in my book at least, and actually It doesn't normally turn out like that, but in my book at least, when it starts to come down, it comes down really fast, like we just seen with Bitcoin, down from 125 to 80 in 2 or 3 days. Yeah, well, it's gone back up to 90. Yeah. But no, that's not for me. But you can consider that as a method. It's not totally crazy. Theory says that it's just as likely to be in your favor as getting out too early, that you get out a little bit too late. But anyway, we're in that parabola with silver, and it's repriced, and it's been in equilibrium, and now it's breaking out again. Now here's another chart which is meant to give you a guide on what it could do. And what I do is I say, well, silver, and all the people in silver, they're all the same people that are in silver, and it does what it does, but it kind of always does what it always does. So when silver runs, boy, it runs. And you can see that in the past. And when it runs in a certain way. So you can take its attributes, its field marks from the past, and say, well, it did that in that shape in 1993 or 2011, and go, right, well, let's scale that up. And if that's what happens again, roughly speaking, right now, it's going to do this. And that's what this chart is. And you can see that that's pretty interesting, but you can also see it's kind of already doing that. You can see that's not a bad template. It's not a bad speculation. It's not a bad projection of what it's actually doing. And that is the deep value in these things, because you look at that and you go, it could do that, and then you see whether it does it. And you can just say, well, yeah, it's kind of still doing it. Oh, yeah, it's kind of still doing it. Oh, yes, it's paused and it's doing the repricing where it's kind of meant to. And oh, look, it's broken up again. Oh, look, it's going again. And that gives you something to cling on to when you're making all those profits and you're worried about losing them. Because what happens to most people is they put the money in and they do well, and they put more money in and they do well, and they put more money in and they do really well, and now they've got more money in play than they're comfortable with, and they start to get very, very stressed out and start to panic, which is only natural. And then because of the emotions, and because they've got nothing to predict what happens next apart from a load of lunatics on YouTube like me, they get disorientated and not sure what they should do next. Well, these are maps to give you kind of guide rails, to give you indications of how it could unwind. And of course, as long as they stick pretty close to that, or reasonably close to that, you don't have to listen to me talk. You don't have to listen to some crazy guy telling you silver's going to 1,000 and that the world's going to end and aliens are going to land. You can just look at that chart and go, yeah, it seems to be panning out. And it's panning out like that because the market operates in a very similar way and produces very similar patterns at all different scales. And if you want to learn up on maths, you can go and read about fractals and self-affinity and self-similarity and all that good stuff, and you probably don't want to. Just have a look at that chart, and if it sticks roughly to it, or any one of these ones roughly sticks to that trajectory, then we're in good shape. Me, I think I will be waking up at 3 a.m. in the morning at about $80. And the moment I start to wake up in the morning at 2 a.m. to see how it's trading in Japan or wherever it's trading, that's when I'm going to be getting out. And if the media starts saying, look at silver, there's queues around the block, oh wow, amazing, it's going to 5,000, I'm going to get out. And if it goes all quiet and nobody's saying it's going to go down, then I would start to think about getting out, because that is the sort of the media cycle. And everybody talks about, it's all about what people feel about the markets and that make the markets. Well, I'm not so sure. When everybody says it's going to go down, it's going to go up. And when everybody goes quiet, well, maybe it's gone up enough. Or if it's going up a lot and nobody's saying it's going to go down, maybe there's some legs in it. But you're in that 50-50 grey zone. When everybody says it's going to the moon forever, get out. So the market expresses itself exactly wrong, because the people that make the most noise are the people in the most trouble. But anyway, we've yet to see what happens next. I'm expecting into the 60s, and then when it hits a repricing level, then I'll be thinking again what happens next. Now, there's only one other thing that could happen, and it does happen actually not that often, is this little breakout we see, it goes sideways, it breaks out, and then it goes, and the great promise of a massive rally just doesn't happen. And that's worth bearing in mind, because what I'm telling you is not fate. is just probabilities, and it's not advice. It's just something for you to think about, raw material for your own decisions. I'm bullish. I believe silver's broken out, and for you gold bugs, I think gold is probably going to be following along, and off we go. Now finally, you might ask, why, what went right? And the answer is there's been a liquidity cash squeeze in the markets because of the American shutdown, which is reopened, and because of Fed policy changes, which has disrupted the whole situation. They've pumped in, I read, and it might be wrong, but they've pumped in $110 billion into the markets. And when you pump money into the markets, they go up. When you drain money from the markets, they go down. And there was money being drained from the markets, just not by anybody, but by the process of the government shutdown and by the Fed actually having to change its policies. And now that's all sorted out, and the money's been put back in, and life goes on as before, and up we go. So thank you very much, Fed. Thank you very much, all those people in government printing money like sailors. You know, we are the lucky few that are riding in on their coattails, and all those poor people out there who don't know what's hitting them, they're the ones that are suffering. And I feel sorry for them, but there's nothing we can do about that. The only thing we can do is coattail this and look after our own. Anyway, thank you very much for watching, and thank you very much all my members for being members, and there'll be some more member videos coming along very shortly. Goodbye now.